Welcome everyone to the Euro Trade on this fine Tuesday. Now today we do have a London session that is open. Yesterday was a bank holiday and therefore we basically had two exchanges that were completely missing from the whole picture. I did do a couple of copper trades and that was pretty much it, but you know, for the most part I wasn't forcing anything. Really, it was just pretty relaxed, but it does look like today they might want to continue the narrative of taking this outside of value. I'm looking at copper. Now, if you're here for the first time and you've randomly stumbled across the stream, welcome. My name is Deeyana Angelo, better known as Market Stalker D. I've been trading for 18 years, 13 years out of which I've been trading futures, almost 14. I am a Series 3 qualified trader, but everything you see here is for educational purposes only because I'm not a CTA. Bruno has already posted the risk disclosure. All right, so let's have a look at this copper trade from the technical side. And I'm just going to remind you that on the weekly chart, we do have this big drop. That can be taken as a single print on a very, very large time frame. And okay, going down to the daily chart, not much to talk about here. There's still some space before we hit some higher volume areas and supplies, however you want to call them, it's all the same thing. But today, London session is opening inside the area that we were in yesterday. Now that's not super unusual whenever we have a holiday day. And even though the value areas from holiday days can be a little bit tricky because they are unreliable, we can pair that up with the current day's TPO profile that carries a lot more resolution inside it. So let's see what they've done there. I'm just going to focus on this chart here, make it a bit bigger because we're not old. Actually, I could use some glasses today, so let's make this a little bit better. Okay. Neutral day already. So open inside value. London time, because it wasn't really a London session since we didn't have any active trading. London was trading between 479.80 and 476.05 yesterday, right? So now we're slightly below it, but for the London Open we didn't really make any big move away during the Asia session, even though it did have a nice sort of trending move upside. And now we're staring at a neutral day. Why do I say that? Because this red box delineates the first hour of London, which started with this black candle here. I made the box a little bit wider just so we can see where the actual wicks and edges are. And if I point to this area up here, just above 477.05, you can see that we tried to go higher and then it just smacked back down, tried to go lower, creating this really big long-legged candle. So basically it's got wicks both sides. Still very big indecision, I would say. But one thing to take away from this is that we are below that value from yesterday and attempting to go below VWAP from the Globex session. That could be bearish, but we don't have any single prints here. So there hasn't been a big decision to move the price away from the initial balance. So we're now just staring at, you know, some market making activities here. So we need to wait. We need to wait and see what they want to do with this, because whenever you have an inside day open and a neutral day, that's sometimes conducive to a range-bound day conditions. So need to be a bit careful. So let's sit and wait. Let's chat a little bit. Today is later on today, I'm doing my first session for the 150k subscriber winners of the raffle who chose me. So I will be seeing you in Discord around 5 o'clock my time, and we're going to be talking about mindset. mindset, very important. In fact, I would argue that mindset is really the biggest secret. Everybody's looking for indicators and, what are these lines on the chart that you have? That's all great, but, you give the same lines, same, concepts to 200 people, you're going to get 200 different results. So clearly it's not all about lines, is it? So we're going to have to figure out why. But yeah, let's have a sniff around some of the other markets, like my dogs. What do we have? Is there anything that looks interesting? Let's have a look at what YM is doing, because YM tends to move pretty nicely. I mean, we have a bit of a failed auction in YM, so let's bring out another chart here. And I know what the monthly chart looks like on YM, because we were talking about that yesterday, right? We had the test over high that was very well defined, and then a jump away from it. Weekly chart, kind of looks a bit bearish. Daily chart reaching that demand area, but it's all a bit thin volumed and no follow through, so I'm going to be a bit careful with that. Sometimes you can get these pivotal pops into weak areas of supply and demand, and then they get a bit of a reaction, but it's not sustained. So in my head, there's two different conditions: whether something pops into an area and then reverses and continues to move away from it, or whether we just kind of touch it, have one candle reacting on any time frame, and then nothing. That's a weak zone, right? So we need to adjust our profit expectations for that. But yeah, let's maybe move to MYM primarily, because most of you trade small startup accounts. You keep blowing up accounts, so we cannot be trading big things. So let's try maybe to plop in 3 micros here. I'm gonna keep it a little bit bigger on the stop side, because I'm a little bit late to the party here. I'm fully aware of that. But yeah, let's see if we can get the rotation back up to this higher day, and see whether they can maybe give us a little bit of a... This would be more of a kind of a scalp for me, because I'm using a failed auction, which is this. So this is the initial balance. Tried to go below it, came back inside it. Really, my entry, if I was looking at this actively, should have been closer to 38,642, but we're a bit late. This is why, we can get the bigger stop loss, and then the possibility to adjust that. If we start to go into some drawdown, you can always add and then adjust the better. I know that people are like, no, you shouldn't be adding to a losing trade. But if you're adding with some sensibility rather than, 3, then 6, then 9, then, that's where problems arise. If I'm going to add onto a position that's already in profit, I will add a quarter, and that's it. If the position is going into a drawdown, I will consider starting on 3, then maybe adding up to 5. But again, trying not to mess up the entire zone and entire original trade idea that we had in the beginning. ZN. I'm not a bonds trader. No, that's I don't look at bonds. I was put on a fixed income desk before I was quickly moved on my request to ES, and then also quickly moved to crude oil, where I stayed for a very, very long time. Bonds are not my market. I know enough about them and enough about negative versus positive correlations, and just the bird's eye view of what they are used for, how to run spreads on them. But, I don't like trading them because, frankly, they're slow. compared to some of the instruments that I trade, like DAX. Just give me one moment, just 1 second. All right. So yeah, ZN and you know, bonds, ultra bonds. I'm not your person for that. You're better off asking who trades bonds mostly apart from Jack. I'm just trying to think. Coach Paul, I think, is probably your best bet. I think Coach Paul is one of the most kind of rounded traders because he's got so much experience, but also because he's you know, extremely knowledgeable, and he has a incredibly wide knowledge about nearly everything, and it's like endlessly captivating. So yeah, I think bonds, Coach Paul is your best bet for that. I'm more on the commodity side, right? So I am somebody who trades slightly odder products. I always say that in my intro as well. So I trade things like copper, gold, crude oil, RBOB, which is gasoline futures, platinum, you know, things that are not necessarily seen every day, but they are, you know, to me more interesting because there's a physical supply attached to it. It's not just some creation of the, you know, capital markets and whatever. So so I don't know, to me that makes more sense, and I've always gravitated more towards the commodities, so I'm a commodities trader. So yeah, I would like to help you out, but I don't like to talk about products that I'm not an expert in. You know, I spend a lot of time doing backtesting, strategy, adjustments. You know, anytime I'm getting involved in a new commodity, I will spend probably 3 to 6 months observing it, trying things out, you know, gathering, collecting data before I'm like, yeah, this is how this moves, this is what works on it, this is what doesn't work. So, you know, even though it looks like I trade like a ton of things, I don't really. I focus on maybe about 6 or 7 things, and, you know, I'm highly specialized in those. Can we take a look at a US equity? Here we are, YM. So yeah. But literally, I'm just, I'm very suspicious about the daily test of this demand, which is why I'm only looking at this as a short-term opportunity. It's going to take quite a lot of power to make this into another long. And because there's no follow-through on this particular reversal from a very large time frame, I'm skeptical. So I would still say longer term, wouldn't expect this to hold. Shorter term, yeah, we could have an opportunity, which is why I'm not shooting for, you know, 300 ticks on YM. I'm just looking for the top of the initial balance, which is a natural rotational target for this sort of a trade, which is a failed auction based off the fact that they couldn't initially find any buyers, any sellers to take this outside of the initial balance range and to keep going lower. We're sitting below yesterday's activities from this time of day, but again, it was a quiet day, so wouldn't expect necessarily a full rotation up to the value area as a mean reversion trade. I'm just going to scan through the time frames here to make sure we're not running into some low time frame areas. Okay, so there's a bit of a supply right at 38,668, which I haven't seen before, but that's okay. 5 minutes doesn't really spell that picture. This is more, again, on low time frames, to me this looks like a distribution, but I can't ignore the failed auction, so this whole structure just looks like we're distributing. But yeah, until we get outside of the initial balance, no shorts. Otherwise, that would be just guessing. And 1 hour, 4 hours. I mean, 4 hours still looks pretty bullish, doesn't it? See, YM kind of moves like DAX, but it's still a different product. Because DAX is much smoother. Like once DAX figures out where it wants to go, you pretty much know immediately whether you're right or wrong. Whereas Dow, I feel like it's got a lot of wiggle in it. It is a little bit, yeah, a little bit more twitchy. Can we say that's an industry term? A bit twitchy? How do you find that there's a failed auction? Let's talk about it. It's one of our FAQs here. All right, so market profile TPOs use 30-minute clues to give us some odds on whether this move has some juice or not. So I look at a couple of things apart from the core definition. Now the core definition is if post establishing the initial balance, which is the first hour of trading, delineated here in the red box, if you have an attempt at the market going outside of that area, and then that same 30-minute fails to close outside of it, so in this case it would be below this whole structure, you can deem that on the first attempt of taking this outside of the first hour trading range, the attempt is failed because we didn't manage to close the 30-minute time frame outside of it. Now, statistically, some very smart people back in 1986 have observed that this, especially in equities, can lead to a rotation through the entirety of the initial balance range, which is the first hour of trading, and it actually rotates even past the other side, right? So you can go into a neutral day. But on a lot of the days, again, nothing is 100%, but on a lot of the days, you will find that the failed auction, especially on the long side in equities, is a pretty decent signal that we can go back all the way to where this thing came from. Now, for me, there are a couple of caveats that I also include in this, and one of them is how did we fail the auction? And what preceded it. So for example, if we have extremely strong bearish engulfings and then we get out and then we effectively just retest the supply inside the initial balance, to me that's another type of a setup that's called weakness inside initial balance. But again, that needs to be matched with, you know, a number of things. Ideally some sort of a supply on the larger time frame. Time of day as well in the way I do trading. So if the time of day is wrong, copper is also making a move. So let me get another dome here. So yeah, but the failed auction, the core definition of it, oh, that's the wrong side. Let's go back to the other side. The core definition of it would be to say that the attempt has been made, there was a pop outside, and then a 30-minute time frame was not able to get this below the whole structure. Ergo, causing a failed auction, right? All right, I'm in short copper now as well. Let's see whether they have a little bit of juice there. If they whack it back upside, I'm only in a micro 3 lots, so that's okay, and 35 ticks. So that should be all right. Okay, so we have a couple of things going. Just testing the waters here. These are not like, you know, star setups or anything like that. Just testing the waters, because sometimes when we are in a position, or actually when you are in a position, you're a lot more aware of the movement for some strange reason. I don't know why that happens that way. But yeah, you're just a lot more aware of exactly how the market is behaving in relation to your entry point, if that makes sense. So sometimes I will do a couple of feeler trades in combines and stuff, and then come the correct time of day for my star setups, I will We have some police activity in this area, which is rare, very rare. You never hear police over here, even though they're like right at the top of the hill here. So yeah, this is quite odd. Sorry about that. Yeah, so sometimes I like to do a couple of, feeler trades on combines, and then that sort of gives me a better idea of how the market behaved in relation to my position size, my position attempt. And obviously I know my setups pretty well, so they're all basically a combination of about 7 different setups or variation. Where should I start learning the energy markets? Well, charts, sitting down, when people say, whenever people say, where should I start learning about this? It's like, it's kind of like somebody asking, where should I start learning to be an Olympic medalist, an Olympic swimmer? You get in the pool and you swim, right? It's a very kind of performance-related activity, even though all we do is click buttons. But, really we are effectively getting involved in an experiential style learning. So no book that you read, whilst useful, no book will actually teach you how to ride a bike. No book will teach you what it feels like to run a marathon. No book will teach you how it feels to swim next to an Olympic swimmer, things like that. It's like, it's a very, very do it your way and then find how you feel through it, rather than, oh my God, which book should I read now? And yes, there is math and there is method to all of the stuff that we're doing. But again, just like sports, trading can be done in multiple different ways. I have one way of doing it. Now, if you come to, to the market stalkers method, where I teach the ins and outs of how I do things, that's one thing. But, this is TopstepTV. I'm not here necessarily to say, oh yeah, definitely learn the ins and outs of market stalkers method. It's like, it's there if you want it, but ultimately it's not there to completely drastically change everything. If you have levels that you quite like and they are partially giving you some results, obviously, I don't want you to throw out the baby with the bathwater, because we all have different styles of doing things. Even if I'm teaching my methodology, I still have some people who are more on the scalpy side, and I have people who only do 1 trade per day and never want to look past any setup that doesn't bring them 3 to 5 hour possibility, right? So there's multiple ways to peel an onion, as we like to say here, because we decided to keep cats out of this equation. So yeah. Okay, so let's see. So yeah, where do you start? You start by looking at how the market behaves during, something like the inventories report. That's your biggest report. You start maybe by reading a couple of books on how the energies markets relate to the inflation, how they relate to the interest rates. Is there any immediate reaction to the interest rates? Usually not, but over time there is this correlation that, can impact the energy prices quite a bit. But, when you come down to its core, learning about trading the energies is just down to learning how they move intraday. And, and to make sure that that you are not spending too much time with your nose in the books and not actually getting out there and, doing some trades, putting them in your journal, seeing how you felt. There's the emotional state that goes along with this job that nobody talks to you about. And, it's like as if you were becoming a surgeon. Inevitably, becoming a surgeon is an extremely difficult job because it will come with certain emotions attached to it. Why? Because when you lose a patient, it sometimes happens. It's not your fault, but, you did everything you could. There will be emotions involved. Just like with trading, it's money. It's an emotional thing for a lot of people. Money is a sore point for a lot of people because, a lot of people don't have enough of it. So it's like, if I could only get this sorted, it's a hugely emotional thing to be thinking that this little piece of software can change your life for the better. And, people put so much faith and hope, and the dreaming goes completely the opposite way, and then you lose a trade and it feels like your entire world is just coming to an end in that one single lost trade. So it's not the fact that you lost some money, the fact that, like, some people say that they struggle to pull off a trade that's like minus $20 in negative, and I'm like, would you think about spending $20 in the grocery shop? No. So why do you have to dramatize or over dramatize losing a $20 trade? Oh, because it pokes into your ego. It's like, oh, I'm not good. Oh my God. And then all the self-limiting beliefs come bubbling up to the top. And then you're like, oh my God, I'm useless. And then negative critic starts coming out. Like, it's not just like, where do I learn the energies market? It's like, I wish it was that simple, right? So really, trading should be looked at as data science on one side and how you react to that data. Does that make sense? That's how I look at it. And my life became a hell of a lot of easier. A lot easier when I started thinking about it that way. What is the thought process behind the copper trade? Joe, the fact that we came out of the value area that, let's not call it the value area because we technically weren't open yesterday, but the fact that we migrated outside of it, that's the thought process. So we have a neutral day. We had an attempted move prior that failed, but we're still below the value and below VWAP and everything. So to me, that is, at this present time, I'm not saying that can't change, because it can in a split second, but at this present time, I'm looking at the location of the price action, which is outside of the value, below it, and continued attempted moves to bring this back down. So I'm not saying this might hold for the entire day. In fact, quite frequently we have, London first couple of hours taking it one way, and then America starts waking up, and suddenly they take it back the other way, and they continue to take it higher. So for now, I can only trade what's in front of me, not what will happen. Because once you start going down that path and playing fortune teller, it's like, I think it's going to go this way. Don't think. Just look at what it is doing, and then let's try and position ourselves based on that. Thoughts, biases, and thinking doesn't really do that great with our inner negative beliefs and all the stuff that I literally just talked about. But yeah, being below the value area, below initial balance, and below VWAP is the primary thinking that maybe, just maybe, we get a little bit of a push back the other way. SM Media with the screenshot the charts and ask GPT what to do. I have 95% win rate. Cool. Why don't you come back to me after a year of daily multiple trades? Then I'm going to believe what you have to say, SM Media. Because, coming out with an outlandish trades, I'm starting a hedge fund, I have 95% win rate. You sound like the biggest scammers out there. So don't do that. It's not very nice. Take it from people who have been doing this for, 18 years, so nearly 2 decades. I have never seen a professional trader that maintained a 95% win rate for years and years. So, I'm inclined to think that you're very new at this. Very new at this. So yeah, you're in for a rude awakening. But yeah, keep trading through your chat GPT, man. Like, it's all good. Paul H said, good morning. I had my first 150K celebration with Coach Paul. He set me homework. Yes, we like setting homework. Whether people actually, he sent me homework, yeah. Whether people actually take action we don't have a lot of control over that. But, when I'm working with traders one-on-one, I give them homework. Absolutely. Like, we do writing exercises. We set new morning routines. We set actual tasks, one task per week, maybe sometimes even several weeks, until some of the stupid things that people do in their trading, they stop doing them, right? Vital. I'm inclined to think this is like a name, Vital. I don't know. With just my Eastern European brain, saying, yeah, let's just make vital into a name. Is it better to not trade around the news and interviews? It's better to trade the aftermath. I never really hold a trade, like unless it's like a minor release that I know my particular product that I'm in on doesn't react to. I will hold a trade. Like, for example, I know all of you are totally obsessed with equities, but equities react to everything. And over the years, I've kind of gotten more and more annoyed with equities. The fact that you can't bloody trade before, 3 p.m. my time because there's always a effing release. So when I'm trading commodities, there's very few releases that you need to be paying attention to, because realistically, only a couple of them, for example, are relevant for copper, and that's the CPI and PPI, right? And yeah, maybe FOMC rate decision, because that kind of affects everything across the board. But for me to be trembling with the home sales are going to bring us some massive fake outs, and then I'm going to be shaken out, and then my stop loss, it's like, who needs that? And I don't know whether I've just become, super cynical over time, where I'm just like, I can't be bothered with equities. And I do trade DAX, so I'm a little bit more aware of things. And, I have like these 2-hour windows when I trade DAX, and then I'm like, okay, I'm done now, because we have, beige book coming out or something. But, when I'm trading things like copper, crude oil, and I'll be honest, gold also annoys me because of that. It reacts to everything just like the equities. So it's sort of, I look at the news releases as shackles. I can't express my view because there's a release in the way. It's like, and then once the release is done, I trade the aftermath. Now, a lot of the times, if I'm trading positions from a larger time frame, that release just basically accelerates what was going to happen anyway, because they do these things where they fish for areas of deeper liquidity pools. That's why, knowing where your supply and demands are on 4 hours daily and weekly charts are a pretty useful thing, especially at times of high volatility. And in fact, looking at the 4 hour and daily should be something that you do every day, in my opinion. Because whenever I see people who are like lost in seeing the forest for the trees and, staring at the 1 minute chart, they never have any clue what's going on in the larger time frames. And I'm like, where are you in the chart location? They're like, well, I don't know, I'm a scalper. It's like, that's great, but you need to know, the overall context of what the hell is going on. And when you zoom out and go into eagle mode to see what's going on in the bird's eye view, and as always, don't forget to paint your toenails black to pretend that you're an eagle, because that's an hour. Then you suddenly have these like aha moments. And by the way, that's a Bill Bailey joke. I found it quite funny because back in the day, that was, I was a musician, bit of a different mindset. And then, he said, oh, what do you do with your life? And then he said, paint your toenails black to look like talons, and then pick up things with your feet and pretend you're an eagle. So I thought that was very funny. And when I'm talking about bird's eye view, we do want to see everything from a bird's eye view. So you might as well look like an eagle, because it's going to help you not grasshopper into a trade. We're going down the animal path here. So it's going to make you more patient naturally. Why? Because, well, on the large time frame, you won't have a signal. You'll be like, well, actually, we're not there yet, so I'm going to wait. So, finding hobbies, pretending you're an eagle, but also other hobbies, that could be a useful thing as a tool to kind of help you control yourself. Okay, so now that this whole thing on YM is happening, I'm not happy with that at all. So I'm going to close that. This is not what a failed auction looks like. We are not following through with the increased volume, and the fact that we've rejected this little supply. That's not what a failed auction looks like either. So I'm going to sit and wait for this to give me a little bit more clues. If we come out of the initial balance, I'm going to run a short. If we continue to go higher, I don't have a setup right now because this is not what I wanted to see. I wanted to see a push in volume. The volume was the same. Short volume is still bigger. So now we want to wait. This one I'm expecting a lot more wiggle, primarily because it's an inside. It was an inside day and a neutral day, so they typically take much longer to come true. But let's just sit and wait. This is all very slow. Very slow start to the Tuesday again. I don't know whether everybody's sleepy. A lot of people go out for bank holiday, Easter Monday, and they get absolutely smashed. So maybe some traders are just like, we can't trade because we're so hungover. Nick G says, hi D, this is the initial balance for the London session. Would you use the same for the metals? Yeah, so initial balance, there's only one London session. Literally across the board, whatever you're trading, there is only one. So it's not like, equity started at 9:30 and then the metals started at 8. There's no such thing. Everything starts 8 a.m. There's also a smaller exchange called Eurex, a lot more important if you're trading Forex pairs or Forex futures, or DAX, which we don't have here, so it's less important. But yeah, only one London session, 8 a.m. Let's see what happens with this copper around this initial balance low and VWAP, and maybe that will provide me with the opportunity to scale in and improve my position. We're going to drop down to a tiny time frame. Tiny time frame. We should have a band called Tiny Time Frames. And let's go 200 ticks because this is not enough. It is not enough. And Nick also says, thanks in advance. I love your courses. Long-time trader here. Excellent. Very good. Very good. Very good to hear that. But yeah, initial balance the same for the London session. It only starts to go a bit weird with like COMEX and NYMEX and New York Stock Exchange. It's like, well, it's very confusing. And then one set of metals has an early close, like platinum closes at 6 p.m. 05, and then you have, even though technically it's listed on NYMEX, so I don't know, it's like a weird thing. And then you have copper that closes exactly like silver and gold, but then you have the energies who are like, well, actually, we're going to stay open for an extra hour because, we're the energies markets, and they close at like 7:30 p.m. my time. So that's where like the New York session really gets really tricky. Okay, this is still pushing. Let's see what happens around VWAP. That'll be over my MAE. What are we doing on the ATR? 20. That calls for a 40 tick stop, really. But let's leave the 35 ticks. It's fine. Hi D, when did you start this combine? A while ago. Let's have a look. A while ago. So it was March the 19th is where I started this. There we go. So didn't start off that well. I mean, really didn't. Had a couple of good days, then pretty much brought myself back to scratch. But as you can see, I'm keeping I'm trying to keep this combine as a poster child of what you should be doing in order to develop your skills further. So if you get lost in a combine, it's finding out things about yourself. It's going to serve you so much better once you get to the accounts that really matter, if that makes sense. Primarily because you are giving yourself a chance to get proof of concept, right? So rather than going, oh, I'm going to post this in 2 days, but I've never managed to hold on to the funded account for longer than 3.5 seconds, then this is for you. This is exactly what you want to see, right? So I've decided here to keep it to make this as long as possible, to only keep it trading during this live stream, okay? Just to see how long it's going to take me. It's like another challenge for me, because usually I'm like, yeah, let's just keep going my normal trades, and then I end up passing them really quickly. But I want this one to last, so I've set a task for myself that I'm going to only trade while I'm on the stream. So let's see how long that takes. It's going to be a challenge because I only have like 90 minutes, right? So I have to find some sort of a setup or not find a setup and be okay with that, right? It's a different challenge for me at this point. But yeah, so I started in March after having passed 3 different combines. And yeah. So we'll see. We'll see how long it takes. We're coming back to the initial balance loan now. Let's see what it brings. 8 a.m. London Open is what time in Chicago? -6 hours. So that's 2 a.m.? 2 a.m. Yeah. Doing the conversion inside my head. Let me change the time and saves to HG because I've just realized I haven't done that. I have bookmap over there, but I want to have something visual for you as well. Okay. Inspireverse says, Deeyana, I'm new here. I've never found success using volume profile. Try TPO profile. Because I don't think the volume profile is... it doesn't have enough resolution. I don't use volume profile for intraday setups. I actually use it on large time frames. Go figure. I use a 4 weeks worth of fixed volume profile. And then I match that with the actual supply and demand analysis that has its own little sub-concepts next to it. So things like initial balance, that's TPO. Like low volume nodes, high volume nodes, and then supply and demand has additional things like, is it a rally-based rally? Is it a drop-based rally? Is it moving too far from it? Is it moving in a nice orderly fashion? Did it move far enough in order to justify the profit margin in relation to the size of the zone that you're using? I kind of feel that over the years, people have sort of lost way, and now everybody's calling supply and demand everything, right? In fact, it's been so muddled. Now, I've been doing this for almost 20 years, and when I was taught supply and demand, we had some super defined rules about it. Now, it's like, oh, support, resistance, supply and demand, order blocks, it's all the same thing. And then none of them are particularly well defined, right? They're like, oh, there's a demand zone here. And I'm like, that's not a demand zone. That's a pivotal pop into something else. That's not a real demand zone. It's very low quality. And if you're going to trade off of that, you're going to find that it's, there's like trend considerations via supply and demand as a trend, not looking at zigzag and higher highs, lower lows on their own. There's a use for that, especially if you're looking for a microstructure timing entry. But really, I will determine whether something is changing trend or not based on a slightly larger time frame, like 4 hour daily, obviously. And then looking at whether the significant supply-demand opposing zones have been broken or not. If they're still holding and yet you still have like a big retracement down or up to that zone, and that zone holds, that is just a pullback. Like, I know that it looks horrendous on a low time frame because, you know, you're looking at a 4-hour chart versus a 15-second chart, and you're thinking, this is a trend up, it's a trend up. But yet on the daily, you have like this downtrend in equities that is pretty obvious. And then you run into these extra supplies that hold on a 4-hour time frame. But you don't see that. All you're seeing is the 15-second grasshoppers that are like ding, 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 ding. We're in and out, in and out, in and out. It's an uptrend, it's an uptrend. And then the big institutional players come in and just run everybody over with their massive shorts. And people are like, what happened? It's like, well, only if you scale out a little bit, you know, just a little bit. 4 hours, not like too far out, God forbid. You would have seen that we are actually in a downtrend coming up against the supply, and the big institutional time frame traders plowed in. So it's like, that's just a pullback. It's not a trend change. So, you know, those kind of definitions, I feel like they've gotten muddled over the years. And then also too much reliance on this flip zone concept, which I've tested mechanically. It doesn't work. Okay. It always finds an additional zone where you had the true move away from it. Like, let me give you an example. Let's use this one. Let's use something that moves. Let's have a look at RBOB. Maybe RBOB will be wiggly enough to show us that. Let me clean this up. I've got a ton of lines. Ton of lines. Ton of lines. Okay, maybe 4 hours. Need to keep an eye on copper as well. Zoom out. All right, so what do we have here? Again, we have a downtrend, right? Huge downtrend. Now, granted, in this case, we are probably looking at the low volume nodes move up. So this actually has more juice. But let me go to the daily chart. Maybe we can find a longer term example of what I mean. Okay, so if we have a look at this area here. So we're looking at, let's get rid of a couple of these just to make it bigger. So let's have a look at a couple of zones. This was a top, right? Reactive, and then we have an offspring area. When this was happening, everybody was screaming, oh, it's a trend change, we've broken a trend line. We have broken a trend line, 3 touches, broken trend line, it's an uptrend. And then this happens. Was I surprised? No, because trend lines in crude oil, like trend lines you can use in something that is like ES or bonds that's like really thick. But I find them a little bit iffy for crude oil in particular, especially in the recent years. Because crude oil really is quite a technical product, okay? And if you were to swing trade it, you can, with quite a lot of confidence, find these edges of swing extremes and, you know, supply zones and demand zones. Usually supply zones are better on crude oil because it has a downward bias over the many, many years that you are watching it. But effectively, it's one of those products that is really reactive to larger time frame supply demand zones, right? So for example, if I were to only look at this move, upside move in an isolated, and this is RBOB, very similar to crude oil. It's like it's twin, but it has a bigger range. So that's why I'm using it here. So once we have, you know, some kind of a pullback in progress, people will be like, this is an uptrend, this is an uptrend, it's an uptrend. But really, it's not an uptrend, it's just a pullback. Because if it was an uptrend, you do not expect supplies to stay reactive. Supplies will be reactive in downtrends. So the way I like to define trend is not via trend lines or higher highs, lower lows. It's whether the previous supply that is significant in size and in value, which means that it had a move enough away, so enough inventory pushed prices away from that area. And then once we came back to it, was it reactive again? If it wasn't, that's a trend change, no longer a pullback. As long as they stay in the formation and, you get a horizontal outlook of the chart, I will deem this chart a downtrend, okay? So if we manage to create new supplies, so let's say we're wiggling around and we move away from this area to go back down, so about 208, and we move all the way down, that will create another reference area of a significant supply that I might be able to use if I'm going to run a hypothesis that we have a trend change versus a pullback. So hopefully that makes a bit more sense. But volume profile on its own, to me, it's a very sort of, let's see where the low volume and high volume nodes are. But then I pair it with this sort of supply and demand analysis to get a deeper insight into it. This didn't come overnight, okay? You're kind of looking at a combination of things. Let me adjust this copper trade here, because now I'm over my MAE and I can actually adjust things a little bit better. All right. Touching VWAP. So now still working on the idea that we have like 35 ticks for a stop. Is this 30? No, it's 33. Okay. So 33 ticks, maximum default size of 5 micros. But, I attempted the first one. Now this is sort of like a bit of a adjustment to the same trading idea, shorts, based on rejection of the value. But everything's still very quiet. So, this probably won't get going until later. So we'll see. So yeah, pairing volume profile with something that gives you a little bit more insight, just a little bit more. That could be something that will clarify things. And then if you're looking at intraday, TPO profile, I don't really find much resolution in the pure volume profile. But TPO profile, it's got extra references. It's got, initial balance. It's got single prints. It's got structure. It's got TPOs. You can look at things, how they are behaving in an auction process, and then have extra information that will help you. So, yeah. Okay. Do you get emotional during trading? No. I couldn't care less, Mike. Really couldn't. I used to. Okay, I used to. Like when I was a novice trader, I went through all of the pains that you guys are going through. Yeah. I had some early success, and then I messed up my first account. So you can find that video, how to recover after a big loss. I talk about it on my channel. You can find the link to that below this video that Topstep has kindly put forth for everyone as a resource. It's a video that I did about a year ago or so, and it literally talks about how I behaved and how horrible it was for me after my big loss, right? I blew up a 70K account, all profits, but, or 68,000 or profits, but still it was in pounds. So that at the time was closer to like $140,000. So it wasn't a trivial amount. And yeah, it was difficult. And that put me on the path to figure out why it happened and what went wrong with me, because it was me. It wasn't, the neighbor or a ghost. I was the one clicking the buttons. So I wanted to make sure that it never happened again. And that's where my interest in neuroscience and everything happened. But at this point, a loss to me is just an expense. It is not, oh, I'm wrong. Boo-hoo, I'm going to be wrong. It's like, yeah, I'm going to be wrong a lot. I have 43% long-running accuracy. 43%. That means I'm going to be wrong a lot. But I also know that once I get into my trade, my trades go at the minimum to 2 hour, some of them to 5 hour. So, it literally bears no difference to me. I'm just like, yeah, whatever. So these days, I've trained, or I've replaced some of my old self-limiting beliefs to have a control loss that is not derailing the entire account. And, this is why I keep the daily loss limit fairly tight, so that I can't go doing 1 million trades per day and thinking, oh yeah, I pulled myself out of a hole. No, you've got 2 attempts, 3 maybe, if you're like trading sensibly. If in those 3 attempts you're not able to generate some sort of profit, just walk away, don't keep going. And, if you're still bothered by losses, I would say go back to your playbooks, go back to figuring out. And most times it's oversizing, not having well-defined playbooks, and then just overtrading and completely losing the plot. Even on my worst sort of overtrading days, I might do like 13 trades. And to me, I'm like, wow, that's a lot of trading. And it's not going to be on one product. It's going to be on multiple products, because I'm like, okay, let's see what happens. And to me, if a day doesn't go well, it's usually because there's no volume. And, as long as things are moving, I am totally okay to wait. One trade doesn't work out, I go and wait. Sometimes for 2-3 hours. I work in sections in the day. I don't work with like, oh yeah, right now I have to do 1 million trades for the next 90 minutes. No, I'm like, if there's a setup, there's a setup. If I'm wrong on that setup, I then wait until the next chunk of the day, when I also know that I have good stats around. And for me, that's between 11 and 1 my time. So 11 a.m. is coming up in half an hour. That's my prime time for trading. So that is when I will be trading the accounts where I want to not mess around in, but, just to have like a solid performance in there. I rely on time of day a lot. You will see that in the style I trade. And then if the London session doesn't go well in those couple of hours, I will wait until 3 to 4 p.m. That's my next sort of day trading time zone. That's what I call them, DTTZs. And then finally, I have the final one when I trade the energies markets. Although natural gas can move before then on a lot of the days as well. Usually I like to trade natural gas between 11 and 1, and then 3 to 5 my time. And then, I'm done. Okay, so copper is still inside this weird inside day, wiggling around, directionless, sort of down, sort of up, but largely not having a defined trend. So again, not the time to go, oh, you bastard, I'm going to come and get you. No, you just go, okay, for this time of day, they didn't move it down. But at the same time, this is the London session. This has nothing to do with what COMEX wants to do with it. So now I have to wait until 3:30 p.m. to see where COMEX wants to take it. So I've got nothing else to do here, okay? There's no point getting emotional. But for most people, you hate waiting. That has to be beaten out of you. Like, literally, not by me, but by you yourself, right? You really have to not be bothered by waiting. Go find hobbies, find something else to do. Don't just sit here and go, meh. So it's just one of those things where if you're wrong in a couple of trades, walk away. Like, so you're wrong. So what? What's going to happen? Is the world going to end? Are you, like, why are people so bothered about losing a little bit of cash on the day? Why? Because it's uncontrolled. That's why. You're oversized. The loss that you suffered is too big for the account. You don't want to admit that you made some mistakes, right? But when the loss is controlled, take comfort in the fact, not that, oh, I was wrong. Take comfort in the fact that your loss is controlled. And I know it's so difficult because you're like, we love to focus over the fact that, oh, I'm wrong. But then to me, it's kind of like being a child throwing their toys out of a pram. Whenever I see traders losing their shit, right? I'm just like, no, so young. Poor baby kind of thing, right? But basically, to me, it's just the immaturity of the trader showing up. And the more that the trader reacts to their losses or wins as well, when you see certain individuals who are like, yes, oh my God, yeah, you get it. Like, to me, that's also being a child and being like, no, he's all up in his like dopamine thing. He looks like he's just done a line of coke or something. It's like, oh bless, they're still high on opium. That's nice to see. But then very soon, once you've been trading after years and years, unless you're like really kind of just making that into a sensationalist sort of thing for the sake of tradertainment, right? You really come to realize that it's not the way to be. Because all of that, dopamine rise, dopamine cry, like we talk about this. Tomorrow we're going to have Neuro Wednesdays again with Jerome, and we talk about it, right? So let's stop being super emotional. And let's stop being children that throw their toys out of a pram and go, hey, I want to trade. Well done, me. Let's just be adults about it, right? Let's just control your size. Oh, you lost. Well, boo-hoo. Stop over-dramatizing it, I don't know. Maybe this is where I get a little bit psychopathic, People are like, Dee, you never get, riled up by losses. No, because it's like, what? Like, tomorrow I'm going to have another day and or even after a couple of hours, it's like, just wait a couple of hours, there will be another one. There's literally nothing to worry about. Oh, you hit your daily loss limit. Was it a controlled daily loss limit? Is the daily loss limit smaller than your bigger days, even by a little bit? If you have 500 daily loss limit, can you generate 550? And mind you, I started with 300 daily loss limit on this. So I've now released the shackles just a tiny bit, because obviously we are in some profit. So there's a bit of a buffer. I'm not going to be increasing my daily loss limit and going, going completely mad at the start of the combine or start of any new account. Alexander wants to know how old I am. It's not a very polite question. I'm just kidding. I'm 44. I will be 45 this year. So not young, not old. Although, it depends. If you're 23, I'm probably very old. In that case, Granny over here. Oh, Vital. Okay, so my Eastern European intuition is right, apparently. Vital is short from Vitali. Tell us, please, some dome tips and tricks you use or used. Okay, so on copper, now you need full size for this on copper. Here's a trick. When you see a markedly bigger order somewhere on the dome, it's very likely that order is going to be hunted. So let's say we suddenly get 43 contracts on either side. And let's say that, for the sake of hypothetical discussion, let's say that you are looking to short, like I am, but suddenly you see this big 43 lot order to the upside. So you see it away from higher up than the current price, right? Its usual sign is that you are wrong on the shorts, because that is where they want to pick up some orders. Now, we have no way of knowing whether those orders are getting out of a position or getting into a new position, but you can be quite sure that they are going to hunt that. And on copper, I've actually noticed that kind of tends to give you the direction as well, at least for the next couple of hours. So that's my little secret. So whenever I see that, it will make me exit a position and possibly look at the other hypothesis. Now, if you've been here for a little while, watching these shows, you know that I don't come into any day with, I want a long or short copper. I have 4 different hypos to speak to both sides of the story. 2 longs, 2 shorts. And then I have another 2 longs, 2 shorts when we change the whole thing and go into a new session, because it's a different type of game, different players, different intentions, different goals. So all of that I've done for London is done. and then we have a brand new session. It's kind of like getting to a new day. You're not going to be using or at least I hope you wouldn't, using all of your analysis from yesterday and then just say, yeah, it's still the same. It's not going to be the same. This is intraday trading. Every day is ever so slightly different. And if you are bringing that sort of sentiment from London to COMEX or London to New York session, it's literally the same sort of a bias. You're painted by your previous experiences that have happened. I'm always joking that I'm like Drew Barrymore from 50 First Dates. It's kind of a rom-com with Adam Sandler, but also Rob Schneider, who plays this hilarious, very inappropriate and politically incorrect character called Ula, the Hawaiian local, who smokes a lot of weed and was bitten by a shark, but still maintains that sharks are naturally peaceful. But the gist of the rom-com part of it is that Drew plays a girl who had a car accident and cannot retain any new memories past a single day. So basically, once she sleeps, she forgets what happened the previous day, and each new day is kind of like the previous day didn't happen. I urge you to develop that as a trader. It's going to serve you so well. So no matter what happened in a day, if you just kind of go to sleep, it all gets wiped out of your brain, and you wake up and you're like, okay. You have to develop that sort of emotional resilience, because if you don't, this is going to be a very miserable existence for you for a very, very long time. Okay. I always had this ability to not dwell on the past. Now, I don't know whether that's because I come from Yugoslavia, so we had like wars there, and I've kind of seen 3 conflicts and 1 bombing in my own Belgrade. So it wasn't the best idea to kind of suddenly get married to the previous day's activities and, where did the bomb fall yesterday? It's like you just learn to adapt and to just carry on. So maybe that's why I'm the way I am. All of us trading, we are a collection of our activities that we've done over the years, and not unrelated to trading as well. It's like it's your collective life experience up to this point that is driving a lot of your decisions. Now, today we have the mindset. If you are in my mindset group today, we will talk a lot about that, and we will talk, about some interesting points. Now, I'm not a neuroscientist, but I will be talking to you about my side of learning about neuroscience and how I have managed to make it work for me. That's the best thing that I can do for you guys, right? And girls. How do you add the DOM on the Topstep platform? You click on Add Components, find DOM, which is literally the first component, and then drag it, and you pop it wherever you want to pop it. Now, here's a question. Is this going to be another neutral day? What's the time? We still have time. Let's see what happens around this localized supply. But this is the initial balance. Let's change the supply to something else. Maybe, yeah, yellow. Why not? So my next hypothesis is that we aren't going to get stuck in a range-bound day, because inside day, we might even get stuck in this range here. But we kind of ran through VWAP like it was knife through butter. So that's also a sign that this could be range-bound for the time being before COMEX. So let's see if maybe, just maybe, HG is what I'm trying to find. Maybe, just maybe, we might find a range trade here. Now, because I am slightly over the halfway point of my daily loss limit, I cannot keep trading 3 and 5, because that means the bankroll is not being managed well. I can't trade 5. I could probably still trade 3 if I'm careful on the entry. Did we take out the previous high? So no, let's wait until they smash 77.35. Maybe getting up to 78. My Pop Shield has decided to usurp my hair. So 78 is the nearest round number of nodes because we have a GEX3 level there. And then let's see if we can come back down and do a little scalp. So range bound day is where scalping is useful. Can we call copper failed? No, because it's a neutral day. There is no double failing of the auctions, okay? Initial balance is not a measure where once we go to both sides, we're succeeding and failing, like failed auction can only happen to one side one time per session, okay? Whenever you are running through the initial balance as if it's not even there, or it's not really much of a measure, that's a range bound day, okay? And in that case, we're not failing the auction. The auction is literally double-sided and neutral. Nobody's winning, nobody's failing, right? And that carries a different target, which is not the opposite side of initial balance as a target, but rather the middle of the initial balance. So let's try that little hypothesis here. I know we didn't reach 78, but let's go down to 100 ticks just to get like a feel of what they're trying to do here. So 78 is up here. I mean, it's not that far, is it? Still very patchy on the orders. And let's also watch the big copper contracts just to make sure we don't see some imbalances there. Let's see if we can minimize the hole a little bit. But today, until COMEX, there's no digging out. However, because I'm only trading this for these 90 minutes, whatever I do here, I will just leave it. Like I said, it's a challenge to myself to see how long this is going to take. Just to make the combine last really long. Like there's no other reason. Just setting stupid challenges for myself. Okay, let's try it. Let's give it a go. But the stop is going to be still 35. And then middle of the entire profile, also 35. So 1 to 1, because it's a scalp. Well, let's see if they bring it back into the middle. But yeah, be careful with the definitions, Joe. Failed auctions are not there to be failing and succeeding to both sides. It's a one-time measure. Now, I'm also going to control my downside a little bit better. So this is a partial stop out. Just in case we go super high. And we do decide to reach that GEX3 level at 78. It's going to limit the downside somewhat. So it's not going to be 131. It's going to be a little bit less. And if that gets hit, so be it. Partial profits, you're the partial stop-outs as well, right? D, do you keep track of fundamentals for copper for trade bias? No, I have no desire in what some doofus working for somewhere else has to say on copper. I have my own eyes and my own ability to discern whether I think we're going up or down. I don't need some, dude telling me, hey, yes, Goldman thinks we're going. It's like, how does that help me today? It doesn't. So no, I put zero stock. I don't even read what they have to say. And, if you start reading it, you're going to get so biased because they get it so wrong as well. Like, how is him working for Goldman and then giving the projection for 6 months on gold, how is that going to help me today in the heat of the moment after, let's say, a CPI release when I need a trade location stop and a target for today? it doesn't, right? So to me, it just became a completely pointless exercise. I stay aware of the news releases that are coming out by looking at Financial Juice every single day. But I'm not going to be, spending time reading Financial Times or watching CNBC. It's like completely pointless. It literally brings me nothing. To add, nothing but noise and information overload. Where's my mouse? I don't know what is going on with my mouse. I spent like 2 days outside and I already have a tan. It's like Mediterranean. Short life hacks at D. What was the thing that they talked about? Giving you bonuses for taking payouts on a live account, asking for a friend. I don't know whether that's coming into consideration. I really don't. I know that MP said that they'll be bringing that. It's on their Instagram and Shorts, I believe, on our Instagram and Shorts. MP was talking about it. So yeah, refer to that. I mean, it would be nice. It's kind of how it used to work, right? You used to make a certain amount for the year, and then typically they would give you a yearly bonus. But, I hear that with Topstep, it's going to not be yearly because very few people actually manage to maintain live accounts past like 3 to 4 months. But yeah, it's probably going to be monetary based. So you make X amount and you get, 20 grand. You make 100 grand, you get this extra amount of money. So, and it would be more appropriate for this style of prop. So yeah, where longevity is not really something that many people have. Did I miss some things? Okay, no. I think that's all the questions. All right. So let's see what this copper does. Typical neutral day. Are they going to smash 78 or not? But so far, just a bit meh. Like literally moving in the same range of 84 ticks for the last 3.5 hours. Oh joy. Come on, sellers. Where are you? Sellers. No, not buyers. Sellers. Sellers. But yeah, it's just a neutral day. This is not star setups. Again, not trading accounts that matter. Because I'm not seeing a good setup. And I'm probably going to be waiting for Colmex because this is all just meh. If we look at the volume on the 4-hour chart, I mean, even since, like literally since yesterday, this is all pretty meh. And then we had, a little bit of kick up during Comex. And Asia seems to be more active than the active exchanges, so that's always fun. But yeah, let's hope they make a decision. So we can grab a few tickies here, as JD likes to say. Some sellers here, but they're on one lots. Bigger buyers, when were they here? Oh, a long time ago. Yeah, you see, so I like bigger players, like not even that big. It's like 3, 5, 4, 6. They were here like at 10:38, which is like 10 minutes ago. It's like, where are you guys? Come and trade. But yeah, the one lots have now decided to sell a bit, so we're seeing a bit of a sell. Like Dalton likes to say, price is nothing but an advertising mechanism of the volume that was transacted. And I tend to agree. Marcus took the Paul H wants to say, if you have a live account, is it normal to blow that? I mean, having gone through XFA and got called up, doesn't that mean you should be good for life? I can't imagine you lose live these days, you could always go back to an XFA. But there's also situations where you might actually get to a point in your life, like let's say you've been building up your live account and you decide to maybe buy another property or, invest it in your long-term portfolio. If you've had over 30 days in your life, you can absolutely drag all of it down and go back to the XFA. You are allowed to do that. But you do need 30 days of over 200, which most people, let's face it, we're coming from the retail side of things, so let's not forget that part. This is not a professional world where the people come into it with a 3-year track record. Yeah, we have people coming in who have, let's face it, no real idea how to properly trade sustainably. So we see people who are well oversized. They get a little bit lucky, catch a tiger by the tail, and suddenly find themselves in a live account, right? Now, first I want to say, if you were called up to live, Paul, not surprised, well done. But don't fret if you blow up the first live account, okay? I wouldn't be super upset about that. In fact, I would be expecting that to happen because there's a lot of pressure and suddenly you don't have the flexibility to go back to the beginning. However, do know that sometimes people would drag down all of their cash and start again from an XFA. It's not unusual, especially if you've been in the account for like, a long time and you decide, okay, it's time to do something with this money. Now let's start again. You will see that happen too. So it's not about, oh, boo-hoo, I lost the account, or once I'm live, I have it for life or never. It's still a process. It's still progression of your skills. So, do your best to be diligent in your live. But if you manage to, hold on to it and yet the account keeps bleeding and bleeding and bleeding, then you kind of have a little bit of success, then it keeps bleeding and bleeding. But you maintain it, which is quite possibly the most difficult thing to do, especially in a drawdown. You maintain it for a while. The risk team is not just going to go, oh yeah, you're a muppet. No, you gave it your all. You didn't just blow it up. Like people who end up on the shoulder tap are usually people who are very irresponsible and they just decide to blow up willy-nilly in like 3.5 days, right? That's who ends up on shoulder tap. People who are diligent and, but they're having a bad time, risk team will work with you. They will be like, hey, is there anything we can help with? What are you struggling with? Let's talk. You can pour your soul out to them. They are very, very sensible people. They're all coming from trading experiences, so they know what it's like, But at the end of the day, we see a lot of people blowing up their live accounts. It's not unusual. Why? Because there's no going back. You blow up an XFA, you can always just buy another combine and be right there. And that's why it's not a fully, you're not an experienced professional. You are entry-level professional, if that makes sense. And you are expected to make some mistakes. Okay? It's just how it is. But yeah, don't over-dramatize things. Don't go, oh my God, I'm in my life, I can't blow up. It's happened. It happens on a daily basis. Don't worry about it. Trading is trading. If you run into, a bad period, you can always go back to the XFA stage after you blow up. It's not like, oh, you can never go back. You can, but you will need to prove yourself over again. See whether you've tweaked something or, what is going on with your skills or your mindset could be an issue. Maybe you were going through a very tough time in your private life. Sometimes we lose a loved one or, people go through divorces. They, you can have a whole bunch of stuff going on in your life that affects your trading. It doesn't always have to be, oh, the market suck or I suck. But yeah, don't over-dramatize. Again, I feel like people over-dramatize the money side of it too much. It's like, oh my God, blah, blah. It's fine. It's just like, it's all for humans. It's all for people. Just own it and keep going. Dust yourself off and back on the horse. Like Kuthrapali from Big Bang Theory like to say. Gear says, cheers from Frankfurt. Good to see you here, Gear. Short Life Hack says, you guys blowing up accounts are just bad traders. I would disagree. I would say it's a progression. Everybody has to blow up some accounts these days to realize that is not the way. The madness is in keep trying to do the same thing. Keep trading 100 trades per day with size and not really having any sort of a defined edge. Short Life Hacks, you know what I'm talking about. Because you've talked about it to our traders here. if you're a scalper, you really, Short Life Hacks said it to us before. If you don't have 10,000 trades for a sample size, you don't actually know where your edge is as a scalper. So there's that. Now, what time frame are we talking about? We're talking about 40 trades minimum per day for a year. Then you're going to know whether you have an edge as a scalper. But people don't. People just go, I'm a scalper. And then they go on an absolute, bonanza of supersized trades 100 times a day. And they're like, oh, I wonder why this is not working. Hello? Risk of ruin. Calling. Hello? Risk of ruin. Yes, D here. Yes, so I would like to tell you that your trading is unsustainable. Is it? Why? Because risk of ruin is in the billionth percentile. What is risk of ruin? Now, I happen to have a video that I made on my own channel about risk of ruin, and somebody was commenting under it. So again, check out my channel. It's got a lot of useful, slightly more niche things that we look at as traders. But yeah. Elvis says, I totally agree. I was an analyst once. There are stages to this business. Yeah. Yeah. Tostino said something very funny, prompted by me. So apologies for us censoring your message. But yes, that was my fault, Bruno. Sorry. Let's see. 10K trades for a scalper, 40 trades a day, commissions will be killer. Yeah, that's another point. A lot of these people who are like, oh yeah, we're going to be doing retail commissions on, 40 trades per day. Do you know what that's going to do for your profits? Do you know how much that costs? Commissions. We had that one guy that did enough round turns on micros to account that if he was live, he would have accounted for, was it 20% or 30% of the daily volume? It was absolute madness. It's what are we doing here? Paul H says, it's a brilliant video on risk of ruin. Yeah. It was a pretty good one. Yeah, I can now look at it. I think I did it 2 years ago or something. So I can look at it from a bit more. I'm very, very critical. And then when I was really sick, all I could see is just my sick face and the way that I'm talking really slowly because I was not very well. And, I'm very I don't like looking at myself. I think most people are that way. Because, you see yourself one way and then you see yourself another way. But actually, I rewatched it last night and I'm like, that's actually pretty useful. But yeah. And funny. I thought I had some funny moments in there that I've kind of forgotten about. Because I like to do the little memes when I'm doing long form videos. Mike says, I want to be chilled like you running a position. Yeah, so do weightlifting before you start trading, journal, and then, in some ways, someday you will regain emotional composure when you realize it really, really doesn't matter. When you control your downside risk. Let's do this another way, actually. So I'm going to scale out of 1. I am short, so let's buy 1. So now I'm in with 2. It was a nice whip here, if you see it. So that was more of a range-bound trade there. I would like to get 35 ticks, but I don't know whether we're going to have time because we're coming to the end of the stream now. So just have to grab whatever I have. Quickly, size up. No, not doing that. 15. That's how you blow up accounts, by the way. You're rushing things. You're I only have 5 days to rebuild. Somebody said on my Twitter, I think it was. By the way, I've changed my settings on Twitter now, where I was so annoyed by some stupid comments that people leave on other people's posts. But I just started getting annoyed with it. So I don't know why it suddenly started bothering me. I'm just oh God. It's it's just people making, for example, the comment that irked me. They said, yeah, but Topstep forces people to reach, what was it? 240 or something like ridiculous, like 140% in a month. And I'm like, no one is forcing you to do anything in a month. It's a subscription, lo and behold, yeah? So everything that happens if you're not in breach, if the account is not breached, you just get rebilled another $49. And this person was claiming that Topstep forces you to generate 140% in a month, and that's never happening. It's like, who the hell is forcing you to make anything in a month? It's like, you can take the entire year. This is another reason why I want to make this combine so long to still be in this at the end of the year. It's like, who's forcing who? Nobody's forcing you to do anything, mate. There is a target, but whether you reach it in like 2 days or 1,000 days, they don't care. They really don't. Obviously, there's a rebill. So the issue is that he didn't want to pay an extra $49 and therefore accused Topstep for wanting for you to generate. No, mate, that's all you. Like, you're the one who wants to reach a target in a month before the rebuild. That has nothing to do with Topstep. That's all up in your head. So those kind of things really annoy me, right? They're just making shit up as you go along. It's like, read and don't project your own internal struggles of not wanting to pay a measly $49 because you're probably not at a very good place in your financial life. But that's not a Topstep problem. That's a you problem. Elvis says, took me years to be consistent. Now I am a technical scalper. In this market stake, 9 points is considered a scalp on ES. Yes, I completely agree. If it was not for Hogue and Dan Hodgman, Danny, I love Danny, teaching me stuff back in 2017 and 2019, I'm guessing there's another thing. Let's see. But yeah, I agree. Yeah. So I really agree. So yeah, now here's something that Elvis is saying. I'm a technical scalper. Not I click buttons without knowing what my setup looks like. It's a very, very different thing. So Elvis told us he was an analyst. Now he's a technical scalper, and it took him years to be consistent. I mean, that's the same for everyone, right? I kind of went through a few iterations of my style. So I was a swing trader. Then I went into intraday. Then I tried to be a grasshopper and scalper. Didn't find myself very comfortable being a market maker. I hated it. And then I kind of found myself in this middle ground. People are like extremists, right? They either want to be scalpers or they want to be swing traders. There's a really nice sort of cushy part in the middle of all of that where you're kind of sometimes a scalper, but you're mainly an intraday swing trader. That's how I would classify myself. So I look for really good trade locations that will give me those sorts of moves, and I pick products that will give me those sorts of opportunities. Now, it's not for everyone, right? But I have to agree with Elvis that Hogue actually was very, very useful for me. Back in the day, Dan was also a crude oil trader, and I did find some of Dan's analysis useful. Now, I don't know whether you know, but Danny is now part of a compliance. Like, he runs the compliance team. So he's still with Topstep. He's still there. But yeah, he's moved roles. So I'm pretty sure that, he still trades, but, he's moved on to be a compliance guy for Topstep, which is amazing. I think it's a perfect role for him. People don't realize how much less difficult these rules are, Elvis continues to follow, than being in a real prop firm back in the day when I started. Hey, I tried it. Yes, same. 2013. Here we go. So the rules that we had was $225 to start with. One lot. None of this like, you can trade 2 or 3 when you have $1,000 enough. It's like, no, there was no micros. What was a micro? Like, what? No, you just had minis, $225 per day to begin with. If you blow up $1,000, you're out. $1,000. People do that now every day, and they keep clicking the reset button. So imagine how much more difficult, Elvis, and I had it when you were given super strict rules, and you're like, whew, I only have like maybe a couple of shots at this today. No micros. $10 a pop on crude oil. 10 bucks a take on crude oil. So you really had 22 ticks to play with before you blew out on the day. And there was no reset. If you blew up an account, you were out the door, kicked out, like unceremoniously. So yeah, you had to think twice before you entered a trade. And now people sit down and click, 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 click. Well, if I blow this one, I'll just buy another one. It's like, hey, cowboy, hold your horses. So it seems the horses are on the cards today. All right. $225, one mini. Yes, that was your daily loss limit. So try and work with that. See how much better your trading becomes after going through that. But that's how it used to be. And now people are complaining. They're like, we're saying 2 days to pass. Can we pass in 1 day? Like, no. What are you going to do when you pass in 1 day? Just blow it up? Because that's what's going to happen. I'm being like super honest with you guys here, right? I don't want to, like, you guys know that I'm pretty straightforward. I don't paint a picture of like, oh, poor you. You blew up an account trading 3 NQs. Oh, poor you. It's like, no, grasshopper. Sort yourself out. That's the only thing I'm going to say. So, I can trade one lots in that way. If I see somebody who doesn't have a problem with control and who doesn't have a problem just being, one and done, they can trade a mini. They can trade a mini. But the grasshopper who does 50 trades per day, hell no, don't go close to a mini, right? Very different thing. And yet we see the opposite. Scalpers are sizing up, entering 1 million times a day. And those who are more conservative, like Paul H, for example, they trade with like a lot less size. It's like, yeah, technically if you're trading 1 a day, you should be able to trade with more size. But that's just my opinion. All right, I'm going to kill this and end the stream. We didn't get the great moves today for the London session. We might get them now, but I'm going to stick to my rules. I'm going to give myself this challenge to only trade while I'm live. So this will be fun. Watching Dee struggle for the next 5 months, trying to pass only in the 90 minutes of watching paint dry. Anyways, let's throw some links for you. Like I said, we've already started the VIP sessions. They are happening in Discord. My session on mindset is today at 5 p.m. London time, which is 11 a.m. Central. I will see you there. It's going to be an interesting one. I've kind of smushed some of my psychological lectures all in one go, peppered it in with all of my experiences. So hopefully that will be good to hear and to maybe derive some useful tips from what worked for me over time. Finally, I'm going to throw you a casting call in case you want to come and hang with us. And fill that form. And we will see you hopefully on Topstep. If you are communicative, if you have an interesting story, if you have an interesting background as well, obviously that's a little more TopstepTV friendly to hear. So, if you're a pilot or if you had an, struggling story of how you stumbled into trading, that's also pretty cool. But it doesn't matter whether you are a beginner at the beginning, or you're on the big board, or you've been doing this for 20 years and you come from an institutional background. We want to hear from you. So I'm going to bid you adieu until later on when I'm running my mindset sessions. Thank you so much for being here with me. This has been the Eurotrade for TopstepTV, and I am Marcus Talker D. Enjoy the rest of your day. Take care.